Hey, it's Kirkpatrick and welcome to the Life 180 channel. And today's video, I want to talk about the price of gold. Why is gold so high? It just broke $2,000, and obviously there's a lot of people who are gold bugs, and there's a lot of people who are on the other side of the pendulum and believe that gold really has no intrinsic value. And so I want to just kind of give my opinion and shed some light as to breaking down and thinking about gold from a more simplistic perspective. Now, here's how I view gold. Now, I'm a big believer that every single person in this world should be diversified. Every single person should have money in different assets. Now, I think diversification is a term that's thrown around and it's misused a lot. Like, a lot of people say you should be diversified and have a bunch of different stocks. Well, the challenge with that is that a lot of stocks right now, most stocks around the world, have very correlated movements in different economies. So, for instance, it used to be if you had international stocks, maybe like Chinese brick fund stocks like Brazil, Russia, India, China, those emerging market type stocks or mutual funds. If you had blue chip stocks in the U.S., a lot of ETFs at this point in time, you can get involved with that are really broken down and segmented in those areas. That was diversification. Well, the problem with the world, since the world economy has become kind of like this one solidified economy, because the United States and every decision that we make really impacts the results around the rest of the world, that when the US tanks, the rest of the world tanks. And yes, there are sometimes opportunities where the emerging markets or certain countries, areas, and there are opportunities where it will bounce back faster, or it doesn't the movement is higher. So especially for day trading, there's more volatility, which is a good thing. However, it's key to understand that there's the monetary policy around the world right now. We live in a fiat monetary system. Now, if you're not familiar with Keynesian economics, basically Keynesian economics is, there was a guy named John Keynes, and he basically said that we should have that federal banks, that Federal Reserve systems like the Federal Reserve, not a federal system at all. It's a private institution, but they should have the ability to create an elastic currency. When things are good, they should be able to contract that currency and pull money out of the economy. That is deflation. And when times are rough, they should be able to stimulate the economy by reducing interest rates, therefore putting more money into the economy, causing inflation, but to help people get through the times of hardship. The problem right now is that we've used so many bullets in that, or arrows in that quiver, that we've now had interest rates at all-time lows for a long time. We're now doing what they call quantitative easing, which is just printing trillions and trillions and trillions of dollars, and the number just keeps getting bigger and bigger and bigger. So I'm going to go to debtclock.org here and check it out, and you can see here that we are now $26 trillion in debt. And when we started the crisis here for the coronavirus in the United States in March, that was only about 23.5 trillion. So we keep printing more and more and more money. And when you look at that number, it's astounding. And the reason I'm a believer in gold, now, I'm not saying I'm a huge gold bug, and I'm not saying gold is a great investment. Gold is simply an insurance policy against the devaluation of the US currency. I know that is kind of a doomsday perspective. I'm not a doomsdayer. I'm not an anarchist. I don't believe that the world is going to fall down around us. But I do believe in preparing for the worst case scenario, and I do believe every single person should have about 5% of their liquid savings held inside of gold, because it's simple math and it's inflation. If we do have a currency crisis, and listen, the United States has been funded solely by the rest of the world at this point in time. The rest of the world, by buying our debt, has funded our lifestyle for a long time to the tune of $26 trillion in debt. Now, I know a lot of that is owned by the Federal Reserve here and in the United States, but at the end of the day, a lot of that debt is owned by foreign countries. And so the rest of the world has to a great extent funded our quality of life. Now, if we do lose a world's reserve currency, and I don't see that happening anytime soon, so don't be making a lot of hate comments about that. I'm not trying to be extreme, but I do believe in preparing for worst case scenario. So I do believe having 5% of liquid reserves in gold, because I tell you what, if for some reason we lose the world's reserve currency status, or if we have hyperinflation, or if something negative like that happens, having that amount of gold is going to become worth so much more money. It's going to have like probably a 20 to 50x growth rate based on the devaluation of our dollar. And so when that happens, that 5% will be a great insurance policy against the devaluation of everything else. I don't think it's anything we're really going to have to worry about too much, but I think by only having 5%, you can insulate yourself, you can protect yourself, and you can really limit your downside risk too, because I mean, the odds of gold going extremely down at this point in time, not very likely. I would go with cryptocurrencies, the same thing. I would have a certain small percentage, probably around 5% of everything that you have in certain cryptocurrencies. Now, don't be speculative with cryptocurrencies unless you're really an expert with it. I would stick to the basic, 3 or 4, the Bitcoins, the Litecoins, the Ethereum, and the Ripple. Those are the 4 that I think kind of are the most stable. But that's what I would look at right now from a perspective of just liquidity and safety and structure, and just kind of viewing crypto and viewing gold as an insurance policy against the devaluation of the dollar. That's how I would look at it. And I think the reason gold is going so high right now is simply because people are losing faith. Look at the numbers. The national debt has gone up 10% since March. That's a huge number when you consider the amount of money we're talking about. You can't keep just printing trillions and trillions and trillions of dollars and have no negative consequences to it. I know there are a lot of people out there that say that you can, but you can't. And so you need to make sure that your financial structure is set up in a way that you can take advantage of everything in all different scenarios. However this plays out, you got to be prepared for all situations. So, hope that makes sense. I hope it helps. If you have any questions, go ahead and comment below. If you like this content, go ahead and hit the like button, share this out, comment. I will engage with every comment that I possibly can. Have a blessed, inspirational day. Go out and crush it. I'll talk to you on the next video.